So yesterday, Beyond Meat announced that they would delay their earnings from November 4th to November 11th. And the market reacted very negative to this news. The market collapsed and it dropped by over 15% in just one day. So is Beyond Meat in serious trouble right now? Or are we close to capitulation, and can this be an opportunity for long-term investors? In this deep dive stock analysis video, we're going to find the truth. So without further ado, let's get started. So we're now looking at the official website, investors.beyondmeat.com. And here you can see that they said Beyond Meat reschedules reporting of third quarter financial results to November 11th. So they're postponing their earnings to November 11th. But why? Why would they do that? Here they give an explanation. The company expects to record a non-cash impairment charge for the 3 months ended September 27, 2025, related to certain of its long-lived assets. Although the company expects this charge to be material, the company is not yet able to reasonably quantify the amount. In short, they found out some of their assets are worth much less than before and need extra time to figure out the exact loss. So they postponed the earnings report by 1 week. This won't affect the reported revenue on November 11th, but it will negatively impact net income and of course the balance sheet. So we're now looking at the Beyond Meat charts, and we can see that in the pre-market it's at $1.28. Today is 4th of November, and you can see here that my average cost price is around $2.50. So I'm down roughly 40%, but I'm willing to buy more a little bit. So I see this as a long-term investment, but I only allocate a small percentage. So my max loss is only 2% because I only put 2% in. If this thing's going to go back and there's going to be another short squeeze, or the hype is going back, or this company is going to recover, then I make a lot of money, even with only a 2% allocation. And that's much better than a stop loss or something. My max loss is essentially the amount of money that I put in, which is a much better strategy. In order to know whether Beyond Meat can turn around, we need to know if there is an increasing demand for plant-based meat. Well, according to many articles, there is actually a lot of demand, and that's a great news. So with a compounded annual growth rate estimated by many analysts of 19.5% during the forecast 2025-2034, the growing awareness about nutritious diets and increased importance of food safety contribute to the major expansion of plant-based food alternatives and protein-rich food products. And here we can see that the expected growth for demand in plant-based meat is growing. And that is great for Beyond Meat. Of course, there's a lot of competition, but because there is still an increasing demand, there's still hope that this company can recover. We're now looking on StockTwits. We're looking at Beyond Meat, and we can see that for the first time, the sentiment is bearish. In a long time, it was always like extremely bullish. And if we look in the feed, we can see that more people are, there's still people bullish, but there's more bearishness in the feedback. So the question is this going to get worse, or are we close to capitulation? So what is capitulation? Capitulation means the moment when investors completely give up and sell their stock out of fear or frustration, usually after a long price drop. It's when almost everyone thinks the stock is doomed, so they panic sell all at once. And ironically, that's often when the stock hits rock bottom, because there's no one left to sell and prices can finally start to recover. Of course, it only recovers if the business can recover, because if the business really goes bankrupt, then nothing is going to save them, obviously. I saw this picture like on StockTwits and I thought it was funny because this is kind of the psychology behind it. One of the weak points of Beyond Meat is that it doesn't have a strong economic moat. An economic moat refers to the competitive advantage a company has towards their competitors. And we're going to analyze the economic moat according to the Warren Buffett's framework. And if we type it in, we can analyze and we will see that it doesn't really have a strong moat. The overall moat score is 3 out of 10. And Beyond Meat has brand recognition in the plant-based meat market. Competition, low switching cost, and weak profitability limits its moat's strength. And that makes this company a bit risky. Many people can copy them, they have competition. And here we can see the strength and risk. So the strength is a strong early mover brand in plant-based meats. They had the name, they did a lot of marketing many years ago with celebrities, and people kind of know Beyond Meat, they know it exists. They have partnership with major retailers. I think they're pretty good at distributing. You can buy it in over 80 countries. The risks, it's high competition from traditional and alternative protein, low switching costs for consumers and retailers. It's pretty easy to just buy a burger from a different brand. It doesn't really matter. It's hard to lock customers in with Beyond Meat. But I think they have a little bit of a switching cost now because it's popular as a meme stock. So when I go to the supermarket, I decide to buy Beyond Meat and not another brand because it's a meme stock, I own it, and I think it's fun. Another risk of Beyond Meat is that the financial strength is low and the profitability rank is low as well. Their net income is negative, so they're losing money every year. As an investor, it's always important to avoid these 3 mistakes. It can save you a lot of headaches and money. So the first one is do not use leverage, especially on meme stock. It doesn't make any sense to do leverage. The volatility is already insane. You will get wiped out instantly. And this always leads to a margin call, which you do not want. The second rule is don't break your allocation rules by a wide margin. So, for example, if you say I will only allocate 5% to Beyond Meat, stick to 5%. Do not over allocate to that. Because if you only allocate 5%, you either lose 5%, but the upside can still be tremendous because if this stock recover, that can give us a lot of returns in the future. And the third rule is don't fall in love with one business or stock. This is also a big mistake. It doesn't matter how much research you do, how sure you are, you can never be 100% certain. We only know that stocks will make us rich over the long term statistically. So don't fall in love with one stock. In short, Beyond Meat is a meme stock with a lot of risk but also a lot of reward. However, if we only allocate a certain amount of money to this stock, we can turn this into a low risk, a controlled risk, for example 2% or 5%, and still unlimited upside. And that's what we all do as investors. We see now that it's trading at $1.47, and my average cost is around $2.15. I talked about this before. I hold this position for the long term. I either lose or I'm going to win big. I can only lose my max allocation. The reason they delayed earnings is because they had assets they have to recalculate because they has less value. That concerned a lot of people. But I think we just need to be patient and not go in and out. I think we need to wait for the earnings on November 11th. And then we can see if they can beat the consensus. I believe that they can beat the consensus. I talked about that in my previous video, which you can see here. Consensus, the estimates are very negative, and I explained there why. Of course, always do your own due diligence. I hope you learned something today. Don't forget to like and subscribe, and I'll see you in the next video.